Mary, thank you.
Hopefully not.
Thanks for your patience.
Oh, that's fine.
Please be aware for the record that we need to pick you up on the microphone if we can.
Okay.
That's what we need. We feel like so we all get something else there.
We've got elected.
As Steve mentioned, my name is Debbie Smith. I'm with Mount Joy Children Medley. This is our first year doing the audit. And I just wanted to tell you if you know much about our firm, but we are a large Kentucky-based firm. We have offices in 4 cities, including one in Frankfort. I'm actually from the Lexington office. We have staff based on expertise. In my last 13 years in public accounting have been mostly in government. For whatever reason I chose that. And so we do a lot of cities, and we appreciate the opportunity to serve you guys. We really appreciate doing the audits. My normal is to kind of go through sort of a high level. If I read you every word, I have to put people to sleep right in front of me. But what I want is that if you have questions, or if you think that I need to go slower or more detail, you want me to read you numbers of any sort, please stop me and I will do that. Otherwise, I'm just kind of pointing out what I think is some of the more important points as we go through if that works for everyone. And I don't know what your normal is, so if this is different, you want something different, you feel free to stop me. These are our financial statements for June 30, 2011. If you flip, there's a table of contents, and then the most important item, really, in all this 57 pages is the audit report, which is right after the table of contents. This is our audit opinion. It explains that the financial statements are the responsibility of management, and our firm's responsibility is to give an opinion. It should be right after the table of contents in the line just gave you. Sure? It's easy to get lost in. As I was saying, our responsibility is to give an opinion. Of course, you as the commissioners are the ones that are charged with governance, and this will be dated and approved after you approve it at whichever meeting. It makes no difference to us if it's now or January. We'll have some updating to do just to make sure we don't have any events happen between now and then that need to be disclosed. Other than that, it's a simple process. So whatever you decide to approve it, is when it'll be dated. As far as the timing, one thing, the only thing that I'm aware of that you have to meet a deadline on is that March 31st is the deadline for filing your federal, what's called the data collection form for your federal grants. So that would be the only thing that really would make you have to issue the audit at a certain time. As I mentioned, we are giving our opinion. This explains that we do our audit in accordance with generally accepted accounting principles and with government auditing standards because you are a government entity. You can read through this at any point, but the third paragraph in particular is probably the most important. It says, and in our opinion, we believe that the financial statements are fairly presented. What that means is that we're giving an unqualified opinion. We think that they are reasonably presented, that the numbers are materially correct, and that's the highest level of opinion that you can receive. The next 3 paragraphs are a lot of wordy stuff about how we have to present a lot of other information here because the government requires additional information. This is also why this is so much longer than if you looked at a business financial statement. It's a lot of government reporting, required reporting. I'm not going to read you all that because I'm actually going to go through most of it with you. But if you have a question, any please stop me. Page 3, actually pages 3 through 7, are really just a recap. This is something we're not really giving an opinion on. It's called management's discussion and analysis, and I think in the past this has not been included. But this is actually a required document. The government likes you to put this in here. And what it does is it explains all the statements in a little short format. But it also gives management the chance to put in explanations for variances from the prior year, the budget changes, and as you'll see, to give kind of a recap of some of the things like asset activity and debt activity. Everything that's in here, other than the fact that it's comparative and the financial statements are not, because that's how most governments are, is actually later on, so I'll be going over it again. But if you would get the chance, or if you had the chance to read it, you'll see that it has some more explanations that aren't audited because it's just an explanation of what happened. Or an opinion, it's also allowed to include what the expectation is for next year, economically and so forth, if management or the board chooses to put that in there, if that makes sense. I don't know if anybody read through it or have any questions on. If not, I'm skipping it. And I will leave you business cards if you have questions. Just kind of random thought about the financials. But feel free to call me. That's never actually happened, but I would love it if someone actually asked me.
One quick question.
Sure.
The last audit we looked at, we signed off on and finalized with about $250,000 that wasn't accounted for. And that's why I was up with that and was told that they didn't consider, it was done by Charleston Mitchell Company, and they explained they didn't consider $250,000 for material within the context of our budget. Can you tell us what your threshold for materiality is?
Off the top of my head, probably not. What happens is, this is so odd, this is such a government thing, but when we're giving an opinion, this is hard to explain, but there are different levels of materiality depending on where that 250 would be reported.
Sure.
If it's on the full accrual statements, it would be below our threshold, I believe. If it's on the modified accrual, we would also need it to book it. Yes, it would be. I don't know off the top of my head what it is, to be honest. It's a calculation that would be based on assets or revenue, whichever is higher.
This is related to a grant that we received.
It's a back payment, it's a back payment. I think he's referring to, that grant reconciliation,
Oh, gotcha.
maybe, I'm not sure.
Normally, we would recommend all adjustments be booked. If there were any adjustment that wasn't booked, and there weren't any, that management decided for whatever reason we felt should be and they didn't do it, we would actually have to report those to you. So you would actually get that in a report that I would do.
Great.
And I don't have it. Let's see. Page 8 is our statement of net assets. If you're familiar with the financial statements for government, it's really confusing, but there are going to be 3 different bases of accounting in this financial statement. Mind-blowing most of the time, I think, to explain, but this statement in itself is the full accrual. It has everything on it that you have on page 8. It has your fixed assets, which are obviously huge, up in the 40 and 50 millions. It has all the debt that you owe, not just what is coming due, which you budget, but what's actually long-term liabilities. And it's broken down between what is due in 1 year, which would be through June 30, 2012, and what is due in after that. So if you look, the governmental activities, of course, are basic government services, everything, pretty much. Business type is sewer. In this case, that's the only business type activity that we run out of the city. If you look, we ended with total assets on this accrual basis of $150 million. And we ended with total net assets of $111 million. And those are kind of, I think, on the accrual basis, they're really big numbers because, of course, we had to value, at some point the city had to value all the assets that they own, and that is a huge amount, obviously. You guys have questions? Page 9.
Oh, I have
Sure.
one more question, and this is, layman and simple way that I can, which is really what I'm trying to discuss this up anyway.
Right.
But in previous years, we were required to, gosh, I'm trying to think of exactly what we were required to do. We were calculating our municipal aid fund, if I remember correctly. That was being calculated into what we define as our reserves. And Steve probably might be able to be better with the answer to this one. But at some point we were required to, I guess, no longer count the municipal aid fund in what we refer to colloquially as our reserve. You remember what I'm talking about?
Yeah, I don't mean this way, but we separate the general fund and the other funds. Municipal aid is separated in, as other funds in the on the balance sheet.
I think I'll actually get to that.
Yeah, sure.
On this statement, it just shoves everything together. So municipal aid, general, all of our stuff. And I think that's probably
Page 10, you're going to do that.
people don't use these as much for governance because it's required reporting, but who really could just shove the money together? I mean, you will see, if you look at on the bottom of page 8, there's a line for restricted. And all of our grant funded programs and like municipal aid will be included in that. And I could also give you a detail of what's in that. that's what happens, it shows as restricted. Page 9 is just an income statement on the accrual basis. The major difference in this and what you normally see probably is that capital assets are obviously added to the balance sheet, so they're not expenses on here. Your normal day-to-day budgeting, those would just be expenses, of course, because they're cash out. This breaks it down by function, which is required, and it separates your primary government from your sewer. It's an odd format, it's the required format that you start with expenses and then show the revenues don't cover them, of course, because most of your, if you go down near the bottom, most of your general revenues are going to come from general items like property taxes, which you use for the entire city, not just one function. What it'll end up showing you at the bottom is your change in net assets. We have a decrease in the current year for the governmental, and that's really most of the time just a function of timing. We have to make debt payments, this shows those. It doesn't show our fixed asset purchases and so forth. And stop me if I'm going too quickly. It also shows that our sewer, which, okay, sure.
You're on page 9.
Yes, sir.
On that first column,
The
which
expenses.
is total government activities. Okay, 34,499,000. What is that?
Those are expenses on the accrual basis of accounting, which
What?
means accrual is like, I'm sorry, all of a sudden I'm like, accrual basis means that we, as opposed to how you probably operate in your daily, where you show if you bought a truck, it's an expense, right? On a accrual basis, that truck is not an expense. It would not show up in expenses. It shows up on our balance sheet, which is the previous page, in the line called capital assets. So we actually treat those as assets for the future and depreciate them over the life of the asset rather than showing them as expenditures. So on a revenue basis, there's not a whole lot of difference between what you do every day and the accrual. There's just not that much timing wise. But expenses, there will be a big difference because actually, let me show you something. If you flip over, let's skip over for a second to page 13. Page 13. What this shows you is, if you start at the top, it says, okay, here's what, on one of the statements, our net income is $623,000. And then it shows you items that convert to the accrual basis of accounting. So I don't know if this helps or not, but this is kind of going to be how we read through the statements, how we're looking at cozier. You want to jump in?
Mary, I think the things we've all, they're probably more used to the modified accrual, and so unfortunately I've had managerial accounting. But I think for people that have it, it gets confusing, because the bottom is obviously it's going to be the same, but it's going to show you just a little differently how, what columns they go under, or like little cubby holes to plug into. Maybe trying to think, how can I say that?
Well,
It is hard to explain.
It is hard to explain, but which is why I said governmental accounting, they've made it so difficult, most people have trouble following, but if you were operating a business, you'd probably be on the accrual basis of accounting. You record all the receivables when you bill people, you record all the payables when you owe people. If you owe a debt, like a line of credit and a note, you record that as a liability. Whereas in government, that's only shown on these accrual statements. The other statements, what's generally used for like day-to-day, do not show that way because, you're only budgeting 1 year at a time. And I don't know if I helped that or not. I'm not sure I did.
On page 9. What's it, general revenues?
Yes.
Total general revenues. 25,660,000.
Okay.
That's all the revenue we brought in?
That would be all the revenue on the accrual basis, yes.
And so if that's what we brought in, let's say our budget for last year was 30,700,000, something like that. Thinking something like that.
Well, it'll be different. You won't budget on this basis. I'm not even, maybe I should skip these statements, but I'm just kidding. Just joking. No, I mean, honestly, like this has a connection to what you use in the daily and what you budget, but not a great one. failing with these questions. I don't know how to explain it differently. That's just your total general revenues though, too. If you look up above, this is what makes this confusing. See these columns in here? These are other revenues.
Yeah, they didn't have everything in it. It's
General
just
revenues.
property tax and occupational tax is all that's got in it.
What happens in this statement that obviously I'm trying to explain better is that you're required up at the top in those columns that you see that say program revenues to put revenues that in theory directly relate to a certain program. So actually, if you added up all the revenue on this page, you have this 25 million down here in general. And then you have another, let's see, 16 million under charges for services, 294,000 under operating grants, and 1.6 million under capital grants. So it'll actually end up being much higher than what you're looking at. Does that make sense? And this includes, keep in mind, sewer and general.
This would, I mean, and please correct me if I'm misstating this, but really simplifying this, Mayor, this 25,401,000 does not reflect, like the gas tax, for example, that was a municipal aid fund that I was asking about a few minutes ago, and it doesn't reflect permit fees and things like that. I assume it doesn't even reflect the garbage fee revenue.
No, it is just those, it's just the items that the government accounting standards say are used to run the entire government, and therefore you can't just say it's one specific purpose, so they're all general, that's all that it is. I'll try to explain something.
There's some colored gumball here, explain about it differently.
Great.
I'm saying, what, that, move this model over here. It's a visual thing, is all.
Just ignore it.
No, I was trying to say, that would help if you see, because people can sometimes learn easier with like a visual thing.
Sure.
Or sing it.
Sing it.
You definitely don't want to hear that. On page 10, this is the balance sheet for the governmental funds. This is the modified accrual basis. This is a lot closer, it's very close to what you're used to seeing for your daily reporting. This does not include long-term liabilities, and it does not include long-term assets such as capital assets. It's really just the way you monthly budget. Fixed asset purchases are expenses, debt payments are expenses. This is probably the basis that most people focus on, because this breaks it down into your general fund, which is obviously your major operating fund, and then your other governmental, which we're going to get to detail those in the back, but those are all the small funds that we mentioned, the municipal aid, all of those type funds that have some kind of specific purpose. The general fund, of course, is just our general operations. What I wanted to point out on this page is just that, and we ended the year, I don't want to make this a more confusing conversation, but we ended the year with a fund balance in general of 20.9 million. There is a new accounting standard, so if you compare this to last year, I mean, it looks it's going to be different.
That's the question I was getting at in terms of the
Yeah.
changes in accounting standards that comes from this late.
Yeah, and this is, in general, going to be very different probably from last year. And what, I've talked to Steve about this, and what I will probably send, and then you all can look at it and see what you think, is that technically what we probably should have is a policy, because what is supposed to happen in these, how this fund balance is characterized as either unassigned or restricted or assigned, is that there's a formal policy that says who is authorized to designate money, whether we want it to be you all, whether we want it to be the city manager. And right now we don't have that kind of policy because this is a new standard. So it's something that, you know, if I send and you all get a copy of like a draft of an example, you probably want to go ahead and, you know, adapt to your needs, because it's important to decide who's allowed to restrict money and who's allowed to designate it for purposes. Does that make sense? I think designated is the old term, most people are probably familiar with that at least a little bit. Now it's called either assigned or committed. And then anything that's not in a chunk for something specific is included in unassigned funds, which means those are just free to whatever you need to spend them on. Does that make sense? Most of the other governmental you'll see is restricted because mostly those are made up by grants. And the grant sources, of course, require that we spend that money after they told us to. Page 11 is
Dizzy,
just,
can I ask a question?
sure.
Okay, if we were looking at last year's audit report, we've been saying that our general undesignated, our reserve is $8.5 million for the general fund for the year ended June 30th, 2010.
Okay.
If we were looking at a number that closely approximated the general fund reserve fund, or reserve amount, would that be the 9.1 million on page 10 in the first column?
You mean, are you talking reserved or unreserved?
Unreserved.
Unreserved is the 9 million.
9 point, okay.
And technically, you know, you all have the authority, of course, to reserve or unreserve funds, especially if you set a policy, you can decide whether anyone else can do that or not. Whether you want to restrict or unrestrict is obviously up to you all.
Does on page 7, the total fund balance in the general fund as of June 30, 2011 was $20 million plus dollars, which represents an increase of $1,083,603 over the prior year. That $1,083,603, is that, maybe this is a question for Steve, is that what you would refer to as, I mean, does that represent a $1 million increase in what we refer to as our reserves? Is that what that's referring to?
That's the net, basically the net income on the modified accrual basis in total. I don't think that's.
Well,
But
I'm
you're not able to-
talking about the 20, I'm talking about the 1. Does that number not refer to what we refer to as our reserves?
I don't think so.
Okay.
I think that is just the net change.
Not all that $1 million went into the undesignated columns.
Page 11 is just kind of an explanation of what I was trying to explain from the modified accrual to the accrual. It just shows you what's in one set of statements versus the other. Page 12 is our, basically our income statement. It's our statement of revenues and expenses on page 12. This also breaks it down from general and other governmental. You always present general because of course that's the main operating. This is where I think, maybe I can explain to you the net income part and where that note comes from. This, I wasn't going to go through obviously all these numbers in detail because I think most of this is pretty similar to what you've already seen. But this does end up showing what I did want to point out about a third of the way down, our excess deficiency, or excess of revenues over expenditures is about $488,000. That's our revenues minus our expenditures prior to transfers. And then if you look below that, what we have to show separately on there are transfers in. Those are obviously revenues, but they're revenues coming from other funds. They're not outside of the government. It's just where we've transferred money from E911 sewer to the general fund. And then the total of those two together comes to $1 million of, I'll just call it net income to make it simpler. Yes?
Now, we're on page 12.
Uh-huh.
Down on the first column, total expenditures.
Yes.
Now, what is that?
That's our total expenditures on the modified accrual basis. So I mean, it's basically our total expenditures for the year. For the general fund only.
Okay, now, the excess, the line underneath that, excess deficiency revenue over or under expenditure, where is that,
It's the revenues, the total revenues minus the total expenditures.
which way?
Revenues minus expenses.
Okay, now, the other financing sources, transfers in 600,000.
That is 300,000 we transferred from the 911 fund to the general fund, and 300,000 we transferred from sewer to the general fund.
So, now, I looked over the next column, for excess, 164, 678. What is that?
That's where that's our revenues minus expenditures, it ends up being a negative. We actually spent more than we took in the current year for those other funds.
Okay. Now, here's, as I looked at this page, it was my understanding from other things that I've seen, that last year, that we had, that the general revenue fund that we brought in was somewhere like $30,700,000.
Yeah, what he's referring to, if you look at the income statement, and you look at the total revenues, if you break away the grant money, because the grant money kind of comes in and goes out, so you take the total revenues minus the grant money, that's approximately $30.7 million. He's kind of looking at it in a different way, but, you know, your number reflects grant money coming in here and grant money going out, right?
Yes.
So you can't compare them directly, but that's how we can kind of control our financial statement up there. We control on a cash basis. But that's how we control it. We take pull the grant money off of it because that money's going right back out. It's in and out.
Okay,
So we took in about $30.7 million, including transfers, including the transfer money.
including transfer.
Including the transfer money.
That's 600,000.
Yeah, 600,000 at 30.7.
That 600,000 come from?
300 came from sewer fund, 300 came from E911. So that's 600,000.
Okay. All right, and so we got a total there of 30,900,000. Our budget this year is 31.1.
We started out with a budget of 31.1 approximately.
But that we added to it.
Yeah, right. We're approximately 30.
What I'm concerned about, I just want to be clear, you know, then we are spending more than we actually had general revenue funds coming in. We got transfer money, without the transfer money, right?
Before the transfers, we still made money. We were still about 500,000.
We came out ahead this year.
Yeah, we came out ahead this year for about 500,000. But we've added, next year, we bumped our budget, pretty significantly. Because last year we had a $30 million budget, and this next year we had 31, and we've added another $1 million to it. So we've got a $32 million budget the year we're in right now.
That we in right now?
Yeah.
Okay.
Page 14 is a reconciliation. Page 14 is just a detail of the sewer fund. The sewer fund is fortunately on the same basis all the way through, so it's pretty straightforward. Unless you have a question about a specific asset or how it's presented on here. I don't know that you want me to walk you through this, but I can. Page 15 is the sewer fund, basically the income statement. If you see at the bottom, our change in net assets total is a positive $4 million. And that's after the transfers out, which we transferred $300,000 to the general. So we ended the year with sewer of about $53 million in net assets. Sewer, of course, is so large because we have so many fixed assets and things, that's why it looks like such a big number. Page 16 is, oh, we're fine, sure.
Another question for, probably for Steve. But the moratorium issued on the trash fee for the first half of this year, or AKA for the second half of this fiscal year.
Yeah.
I assume, am I correct in understanding that, I'd say $300,000 in lost revenue is reflected?
Right, of course, we didn't collect anything for it, yeah, right, so we didn't, I'll say, yeah, it's reflected in
this
this.
audit.
Yeah, right.
You'll see a
Just-
big budget variance for that when we get to the bottom.
I tell you one thing we did, do you remember we got some prepaid money for that, and we basically showed that as a liability that we had to pay that money back. So we reflected it, the money that we got prepaid, we reflected it, paying it back to the taxpayer, because it's either gonna get a credit or we're gonna issue them a check, basically.